You're about to learn about the best investment you've never heard of. And we're confident by the time we get through it, you'll agree. Let's start with the problem facing the average investor. Not just the average investor, really any investor in the stock market. The stock market has done well the past few years, but if you compare the S&P 500 today to where it was on the first business day of the new millennium, January 3rd, 2000, you'll see that the S&P 500 has appreciated only about 3%, and that's a far cry from the 8, 9, or 10% anticipated when you invested in the market in the first place. Now that's a problem. Now, you have to ask yourself, how optimistic are you about the next several years? Most people are not, especially when they consider what's going on globally. So what do people do? They're tired of market volatility, so they move their money to safe, conservative investments, like money markets, CDs, bonds, annuities. Sure, these vehicles are safe, but the problem is they're not earning anything. If you factor in inflation, you're actually losing money with these investments. So let me tell you about an asset class that is extremely secure, but will still deliver you outstanding returns. We'll put this against any long-term investment out there. More than 100 years ago, the United States Supreme Court validated this superior asset class. Traditionally, this asset has only been available to institutions and the very wealthy. Warren Buffett made an initial $270 million initial purchase of this asset class in 2004, with his most recent purchase being $300 million in 2013. This financial instrument has been a well-kept secret for ultra-high net worth individuals for decades, and has helped insulate them from economic turmoil and provided them with historic double-digit returns. Because this is not a stock, bond, mutual fund, or real estate, it's not well known among individual investors. Stockbrokers and bankers cannot sell this asset class. You need a certain license to issue it, and if someone has a securities license, they're precluded from issuing it. Because they can't issue it, your broker or banker probably won't know too much about it. Let's dive into the details of what this asset class is all about. You might have seen our ad on social media. If you have $100,000, you don't need to worry about retirement. But you're just not sure how this accelerates growth. Some of you might have heard of the concept of bank finance premiums, which really comes down to one simple principle: using other people's money. We're talking about an investment-grade permanent life insurance policy funded by the bank. And oh, by the way, you'll also have access to the cash value of the policy at all times. Let's suppose you know of an investment that comes with 5% guaranteed returns. You have $100,000. If you invest that $100,000, after a year, you'll have $105,000. Not bad, but not great either. But let's say that it costs you 3% to borrow money from a bank. You take the $100,000 that you already have, and you borrow $100,000 from the bank at 3%. You now have $200,000 and you invest all of it. After 1 year, earning 5%, you have $210,000. You repay the bank the $100,000 principal and $3,000 in interest. That leaves you with $107,000, which represents $7,000 growth on your original $100,000 investment. You just earned 7%, even though the investment return was only 5%. Let's say instead of borrowing $100,000 from the bank, you were able to borrow $900,000. Between your money and the bank's, you invest $1 million. After a year of 5% growth, you have $1,050,000. And after repaying the bank the loan with interest, you have $123,000. Because you use the power of leveraging, you're able to earn 23% on a 5% investment return. These numbers get better the more bank money you use and the longer you leave the investment to grow. Now, you may wonder why more people aren't doing this, and the answer is they are. You probably are too without even knowing it. Maybe you own your own home. If so, you probably financed it. Maybe you put $100,000 down on a $400,000 home. You would have financed $300,000 of the purchase price. If your home appreciates by 5% and your mortgage interest rate is 3%, you're experiencing leveraged growth based on interest rate arbitrage. Although it doesn't matter where your money is invested for this to work, the growth rate must exceed the cost of the leveraged money. If your investment is growing by 5%, you have to be able to borrow money for less than 5%. You're going to want to use something that has steady, predictable, and preferably guaranteed growth. That's why we use permanent life insurance. With the life insurance we use, there are guarantees built in, as well as components of non-guaranteed growth. And because cash value life insurance is so safe, banks are willing to give loans with very low interest rates. Unlike traditional premium financing, our plans do not require a minimum net worth in the millions, do not require you to use personal assets as collateral, and do not require you to repay the bank's investment during your lifetime. The plan, which comes with a large death benefit, will pay the bank back when you die. Who says you can't have high returns on a safe investment? Conservative, safe investments don't have to mean low returns. Interested in seeing what your money paired with other people's money can do for you? Reach out today and we'll do a free analysis.